Joining us now is Needham Global Semiconductor Analyst Raji Gill. Raji, it's good to have you. So is that how we take this, as a sign of increasing economic weakness?
Yes, the demand has weakened further, even just over the course of 3 months, worse than what they expected. I think the macro has softened. A lot of their customers are burning through excess inventory that they built up for the last 2 years. If you recall, about 50% of Micron's revenue comes from the mobile and PC markets. There was a significant overbuild the last 2 years because of COVID, because of the supply chain shortages, the weakness in the Chinese economy. That's been happening throughout the year. It does not seem to be approaching a bottom, but that's leading to the wafer cuts. We think the bottom, most likely in smartphones, is probably going to be more likely in the second quarter of next year versus what we initially thought, which might have been in the first quarter of 2023.
Is the chip shortage over? Is this now where we shift to worrying about demand instead of supply?
Yeah, in some areas the chip shortage is over. For certain components, there's definitely excess inventory of semiconductor components that are going into the smartphone market, the PC market, the graphics card market, more the consumer-orientated markets that have been affected because of inflation and lower consumer spending. There is starting to be more supply coming online for the automotive and industrial end markets and the data center. Next year's supply picture will be much better in terms of allocation of supply and availability of supply. But the challenge is that this is going to be coming right at the point when demand is starting to really taper off and decline in other end markets. A lot of that's been priced into the stocks for most of this year, anticipating that inventory correction. But given the kind of the massive rebound in semis for the last month or so, we've seen a pretty big snapback. We're more inclined to be kind of selling into some of the strength and look for other more attractive entry points.
Does that include NVIDIA, which reports after the bell?
Yeah, I mean, I think NVIDIA is up 45% off the bottom the last 4 weeks. So significant outperformance versus the stocks. We expect kind of a mixed quarter with NVIDIA. We continue to see weakness in the gaming market, which is about 45 to 50% of the revenue. 2/3 of their gaming revenue is tied to the Chinese economy and the European economy. That's 2/3. Both those economies are weak. We still see excess inventory that still exists in the channel there and needs to be cleared out. They've been doing a good job under shipping that market to try to clear it out, but we think it's got another quarter or so to go. On the data center side, we're expecting to hear kind of mixed data points. On the positive side, there's still spending from the hyperscalers on artificial intelligence and machine learning, recommendation engines, natural language processing engines. That's all in NVIDIA's wheelhouse. We don't see that slowing down. But where we do see a slowdown within data center is really on the small and medium-sized businesses, spending less on cloud, the cloud spending, and some weakness in the enterprise. So we expect it to be kind of a mixed bag. But NVIDIA's print is going to be very important because it's basically the last semiconductor company in the earnings cycle. It's a good indication of overall data center demand, which has really been the bright spot for semis of the last several years.
It hasn't been great news for the semis lately, although TSMC, I feel like we need to talk about that because it got a double shot of good news with the report from Bloomberg that Apple CEO Tim Cook is telling engineers and employees that they're going to start sourcing some of its silicon processors from an upcoming plant that they're building in Arizona, and at the same time, Berkshire Hathaway taking a big stake. So are they better positioned than others?
I mean, TSMC is clearly the leading foundry for sub-3 nanometer leading process node technology. They kind of raised their outlook for calendar 23. They have a tremendous history in producing bleeding edge technology. What I think was a little bit puzzling for me is that given kind of the increasing tensions between China and the U.S. and Taiwan being kind of right in the middle of those tensions, that there could be a retaliation from China, and that puts TSMC kind of right in the middle of that potential retaliation. given all the U.S. export controls that the U.S. has pushed on to China.